One of the biggest lies banks tell us is that your money grows when you keep it in their accounts. The truth? While the numbers in your account may increase due to interest, the actual purchasing power of your money doesn't grow. It shrinks. With inflation soaring and bank interest rates lagging far behind, keeping cash in the bank is like watching your wealth evaporate. But don't worry, there's a way out. In this video, we'll reveal 6 powerful assets that will not only stop wealth erosion, but also help you create intergenerational wealth. Stick around till the end for tips that the wealthy don't want you to know. Let's start with gold, silver, and platinum, known as God's money. These metals have been cherished for centuries, not just for their beauty, but for their intrinsic value and rarity. Why are these metals so valuable? It's not just their luster or their use in jewelry. Their value is deeply rooted in their scarcity and the difficulty of extraction. Because they're scarce and can't be printed at will like fiat currency. Unlike paper money, which can be produced in unlimited quantities, precious metals are finite and require significant effort to mine and refine. Governments around the world continuously print money to cover their deficits, making your cash less valuable over time. This process, known as inflation, erodes the purchasing power of your money. Historically, precious metals have been a proven hedge against inflation. When the value of paper money falls, the value of gold, silver, and platinum tends to rise, preserving wealth. For instance, an ounce of gold was priced at $400 in the 1950s. This was a time when the global economy was very different from today. Today, it's over $2,000. And some analysts predict it could reach $10,000 by 2032. This potential growth reflects the ongoing demand and limited supply of gold. That's a 5 times growth in less than a decade. Such significant appreciation highlights why investors consider precious metals a safe haven. If holding physical gold isn't feasible for you, consider gold ETFs or exchange-traded funds. These financial instruments offer a convenient way to invest in gold without the need for physical storage. These investment tools track gold prices and allow you to invest without worrying about storage or safety. They provide liquidity and ease of access, making them an attractive option for many investors. Key takeaway: precious metals maintain their value, making them a must-have in your portfolio. Including them can provide stability and protection against economic uncertainties. Precious metals aren't just for storing value. Some of them are essential in modern industries. For example, silver is critical for electronics, medical equipment, and even nuclear reactors. Similarly, cobalt, nickel, and copper are indispensable for producing batteries, especially for electric vehicles. Take cobalt as an example. Its price doubled between 2012 and 2022, from $20,000 per ton to $40,000. With the global EV market booming, demand for such materials will only grow. If buying raw materials isn't practical, consider investing in mining stocks like Rio Tinto, commodity-focused mutual funds, or derivatives like futures and options. Key takeaway: industrial commodities combine scarcity and utility, offering long-term growth potential.
In times of global instability, the wealthy often shift their money into safe haven currencies like the Swiss franc. Why? Switzerland's political and economic stability makes its currency incredibly reliable. During crises like the 2008 financial meltdown or the 2009 Eurozone debt crisis, funds flowed into Swiss francs, strengthening their value. Even in 2023, amidst geopolitical instability, one Swiss franc fetched over $1.1. Don't have millions to deposit in Swiss banks? No problem. You can gain exposure to safe currencies through currency ETFs or Forex platforms like Forex.com. Key takeaway: diversifying into stable currencies protects your wealth from unpredictable global events.
Ever notice the words on a US dollar? These words hold significant meaning and are a testament to the trust and reliability placed in the currency. This note is legal tender for all debts, public and private. Essentially, it means that the dollar is recognized as an acceptable form of payment for any financial obligation within the United States. This means the dollar is backed by the faith and credit of the U.S. government, not by physical gold. Unlike in the past, when currencies were backed by tangible assets like gold, today's dollar relies on the economic strength and stability of the U.S. government. Governments are typically the last to default, making their bonds and securities one of the safest investment options. This is because governments have the power to tax and generate revenue, providing a reliable source of funds to meet their obligations. For example, U.S. Treasury bills, notes, and bonds provide steady returns, often higher than bank savings accounts. These instruments are popular among investors looking for a secure and predictable income stream. You can buy these directly through the Treasury Direct portal or through secondary markets. The process is straightforward, and you can start with relatively small amounts, making it accessible to a wide range of investors. However, stick to investment-grade securities from stable governments to avoid risks like the 2009 Greek debt crisis. This crisis highlighted the dangers of investing in high-risk government securities, which can lead to significant financial losses. Key takeaway: sovereign guarantees are a low-risk way to preserve and grow your wealth. By investing in government securities, you can benefit from the stability and reliability of government-backed investments, ensuring your financial future remains secure. While government bonds are safe, they often provide lower returns. For higher returns, consider value stocks, shares in companies with strong fundamentals and stable earnings. Unlike speculative growth stocks, value stocks are less risky and often pay dividends. Don't have time to research individual stocks? Invest in dividend-focused mutual funds, like the Vanguard High Dividend Yield Index Fund, or exchange-traded funds, also known as ETFs. These options are ideal for investors seeking steady growth without excessive risk. Key takeaway: value stocks and mutual funds offer a balanced mix of safety and profitability. Land is one of the few assets that accountants classify as non-depreciable. This means that unlike machinery, vehicles, or even buildings, land does not lose value over time. In fact, it often appreciates, making it a unique and valuable asset in any investment portfolio. Why? Because it's finite, and its demand will only grow as the global population increases. As cities expand and suburban areas develop, the value of land continues to rise. This increasing demand, coupled with limited supply, ensures that land remains a sought-after commodity. Over the years, real estate has consistently proven to be a strong inflation hedge. When inflation rises, the value of real estate typically increases as well, protecting investors from the eroding effects of inflation. This makes real estate a reliable store of value. For example, housing prices tripled between 1992 and the 2020s, despite the 2008 housing market crash. This resilience highlights the long-term stability and growth potential of real estate investments. If buying physical property seems out of reach, consider real estate investment trusts, or REITs. These trusts pool money from multiple investors to purchase and manage income-generating properties, offering a way to invest in real estate without the need for large capital. REITs let you invest in commercial properties like malls, hospitals, or office spaces with minimal capital. They provide a way to diversify your investment portfolio and gain exposure to the real estate market. Another option is rental properties. Owning rental properties can generate a steady stream of income. By renting out properties, you can cover expenses and mortgage payments while building equity over time. Borrow to own rental properties, letting rental income cover expenses while building equity. This strategy not only provides monthly cash flow, but also allows you to benefit from property appreciation over the long term. Key takeaway: real estate is a timeless investment that grows with the economy. Whether through direct ownership, REITs, or rental properties, investing in real estate offers numerous benefits and opportunities for financial growth. Finally, we have collectibles: vintage cars, rare art, limited edition watches, and more. Unlike regular assets, collectibles often gain value over time due to their rarity. For instance, a 1955 Mercedes-Benz 300 SLR sold for €135 million in 2022. Similarly, Da Vinci's Salvator Mundi fetched $450 million at auction. If such high-ticket items seem unattainable, platforms like Whatnot allow you to trade smaller collectibles like rare baseball cards, action figures, or comics. Alternatively, try fractional ownership platforms like Convi or Masterworks to invest in high-value items without buying them outright. Key takeaway: rare collectibles provide unique opportunities for massive appreciation. Keeping money in the bank is no longer a safe bet. By diversifying your investments into these 6 powerful assets, you can protect yourself from inflation, grow your wealth, and create a financial legacy for future generations. If you found this video helpful, don't forget to like, share, and subscribe for more insights on building wealth and achieving financial freedom. What's your favorite wealth building strategy? Let us know in the comments below.